First, do no harm. Who said that? Hippocrates. Actually, he didn't. The Hippocratic Oath, which is one of the mainstays of medicine, starts with, first, do no harm, which expresses the principle of minimization, the principle of utility. And this utilitarian philosophy says that before you try to fix things, make sure you're not making them worse. Ironically, Hippocrates, the father of modern medicine, or the father of medicine, period, didn't say this, and it wasn't part of the Hippocratic Oath. It wasn't part of Hippocrates' writing. It was added after the introduction of modern science in the mid-19th century. First, do no harm. Because some things are not just useless, they're worse than useless. They actually do harm. And that is the title of my talk today, Worse Than Useless. Hippocrates was actually a big proponent of bloodletting. And bloodletting was a practice that started in the ancient Mediterranean region that involved balancing the humors in the body by bleeding people out slowly. And the idea was that the various fluids in the body need to be balanced, kind of like a hydrodynamic system, right? Before modern science started thinking of our body as a machine that's made of clockwork, right, which is the 20th and 19th century visualization of science, the ancients saw science as a matter of essences, of humors, earth, fire, water, air. And part of the idea of bloodletting was that if these things are out of balance, you need to release some blood to bring things into balance. This practice continued all the way through to the 19th century. And one of the things I love is that one of the most famous victims of bloodletting was the founder of the United States, George Washington, or one of the founding fathers. And late in his life, George Washington woke up one day with a sore throat, and he was a big fan of bloodletting as a medical practice. So he invited his doctors slash butchers to do a nice bloodletting. And over the next 4 days, they bled about 7 pints of blood out of him. And the historical record records this. Despite the treatment, he passed 4 days later. Now, some of us might say, because of the treatment, he died 4 days later. And it's an irony that this practice continued for 2,500 years. Why is it important to remember this concept of do no harm is because unless you follow the scientific method, many of the common practices that we apply today are based not on science, but on superstition, on anecdote, on wishful thinking, on righteous morality. And one of those is financial surveillance and the system of know your customer and anti-money laundering rules. The modern system of banking, brought into being by the Bank Secrecy Act, 1970s, is a creation that bears no scrutiny from science. It is based on the righteous moral thinking that bad people should not have access to money. And as long as we trust those in authority to tell us who the bad people are, and assume they're not the bad people, then everything will work out. If you criticize this idea, you're not presented with facts, you're not presented with data, you're not presented with science. You are accused of not being morally righteous enough to understand that we must, for all reasons, protect the children. Won't somebody please think of the children? Because there are criminals out there. There are bad people, and if bad people can use money, they might use it to do bad things. And it's very difficult to prosecute the bad things, but it's a lot easier to prosecute the money. And so we do it. And does it work? No. But if this practice was useless, that would be good, because it's not useless. It's worse than useless. In fact, it does enormous harm. Enormous harm. Part of the reason that billions of people around the world have no participation in the world economy, are financially excluded, is directly related to the fact that a closed financial system, where authority is given to few to decide who is good and who is evil, to decide who should have access to money and who should not, and which starts with the fundamental idea of identity being a requirement for every endpoint of every transaction, is a system that will always exclude billions. In the age of the internet, we have come no further in terms of financial inclusion, and in fact, we are now backtracking. Entire countries, entire continents are disconnected from the world economy in order to satisfy the moralistic bourgeois idea that we are safer if we allow bureaucrats to decide who has access to money and who doesn't. Money laundering happens. Money laundering happens every day. But there are some who can money launder without consequences. Because in our modern world, there is such a thing as a license to launder money. It's called a banking license. As long as you have one of these magic licenses, you can launder money all day long. Who is money laundering? Of course, conventional wisdom, common sense will tell you, of course, it's the banks. They have the money, they launder, obviously. And if you actually look at the statistics, if you look at the data, this fact is shown again and again and again. Banks launder money. In fact, that's their main activity. They launder money for governments. They launder money for intelligence agencies that fund terrorism. They launder money for narco-traffickers. One of the hilarious examples of our modern world was a certain enormous bank that had modified the bank teller windows in the northern border of Mexico so they could precisely fit a Samsonite case that was the favorite case of drug money launderers, so that they could stuff cash through the window conveniently inside the Samsonite. They wouldn't have to even unpack it. Of course, in those days, the big drug cartels were making so much money, and they still are, that you don't count the money, you weigh it, right? Because it's faster. And who has time to count a truck full of money if you can just calculate the net weight in dollars? Money laundering is something that banks do on a routine basis, and every time they're caught, they pay a fine, no one goes to jail, and banking continues, which means that this is a fundamental part of business, and it is rewarded with a series of incentives that ensure that by playing these fake regulations, they get the competition out of the game. One of the reasons that no one can compete with traditional banking using technology is because the regulations ensure that they will not be given an opportunity. You must ask for permission first, and the answer is always no. Unless you can afford a banking license, and unless you can afford the license to money launder, and then the fines that come with that as part of doing business, which of course banks can afford because there's only one thing that banks do well, and that's make a lot of money. Worse than useless. The very basis of this model of modern finance is an idea that should be so abhorrent to free people as to be the topic of every conversation. We discuss the revelations from Snowden, the revelations about broad-based surveillance of all of our societies based on the internet, and yet the elephant in the room, the thing we don't discuss, is that the form of most pervasive and most intrusive surveillance that exists is the international network of totalitarian financial surveillance. Every time you use a debit card, every time you use a credit card, every time you use a bank account, every transaction gets funneled to every intelligence service and every government that has access to this network. When people criticize Bitcoin, they say it will enable the dark net. What is the dark net? Well, presumably the dark net is a network that is invisible to most of us, that operates on top of or in parallel with the internet, and on which massive amounts of illegal activity happen. If that is the case, the dark net's name is Echelon, Prism, Keyscore. Those are the names of the dark web. The dark net is operated by intelligence agencies because they are on a daily basis committing massive crimes against human rights. They are orchestrating a totalitarian financial surveillance network that monitors everybody's transactions and, as a result, everybody's location, everybody's purchasing preferences, everybody's political preferences, and what kind of porn you watch. Because all of that is tied to your financial life, because everything is tied to your financial life. This system of totalitarian financial surveillance is the dark net. They don't fear the dark net. They just don't want us to have one too. Worse than useless, because this system ensures that 2.5 billion people live in the world with absolutely no access to financial services. 4 billion people if you count their families, and minimal access to the most basic financial services. And if you really count the type of power banking that a Western person has, 6 billion people have much more limited access to that. This is what this is about. This is about the other 6 billion. Why does Bitcoin matter? Because Bitcoin enables us to build a system where we flip the traditional balance between secrecy and privacy. What is secrecy? What is privacy? Privacy is what I have, not because someone gives it to me, but because I take it. And not because it was granted as a privilege, but because it is my human right as a human. I had it from birth. I will have it forever. And that is immediately suspect. Secrecy is the ability of a government that is supposed to be subservient to its voters, to operate for the consent of the governed, to instead bypass democratic control, to bypass auditability, to bypass accountability, so they can funnel billions of dollars into black projects that fund terrorism, that fund drug lords. Who funds ISIS? Our tax money does. That's the uncomfortable truth. Not Bitcoin. Dollars. Rubles. Yuan. Money laundering is a government activity supported by banks. Terrorism financing is a government activity supported by banks. And yet, they have the audacity to claim that the simple idea that people should be free to transact and participate in a global economy and exercise their birthright of privacy is going to cause the world to descend into chaos, mayhem, anarchy. What happens if people can transact anonymously? Nothing happens. For thousands of years, people were transacting anonymously. The greatest, most established, most private, transaction-free, peer-to-peer network of payments is called cash. We had it for thousands of years. And then suddenly in the 70s, we decided this was dangerous. And instead, we needed to move to a world of totalitarian financial surveillance. That's what it is. It's all-encompassing. It's all-powerful. It is all-secret. That's what the word totalitarian means. It is fascist. And yet somehow we have been persuaded that for the sake of the children, we must operate in a world where every one of our transactions is visible, but every one of their transactions is private. And I say that's the wrong way around. I say we have to flip that equation, and we have to flip it fast. Because the reason the world is in chaos is partly because of that. You want to breed terrorism? Cut people off from the world economy. Trap them in poverty. Remove justice. And what happens is war. Martin Luther King said, "Peace is not the absence of war. It is the presence of justice." And justice starts with the assertion of human rights. And what we are doing with Bitcoin is not just playing with money, getting rich, trying to create the next ICO, the next whale, the next overclass of rich people who are going to lord over everybody else. At least that's not what I'm interested in. I'm interested in creating peace through justice. And justice starts with the ability of every human being on this planet to be able to transact freely, with privacy, with anyone, anywhere, anytime. Uncensorable, unstoppable, anonymous. You think the fight over block size was bad? You think a few people trying to disagree with trolls and sock puppets and social media and throwing money around to influence opinion on both sides was bad? There are people right now who are working on the next level of Bitcoin that includes zero-knowledge range proofs and confidential transactions, massive scale coin joins, onion-routed payment channels which are completely anonymous and untraceable and unstoppable. People ask me, what do you think is the biggest problem with Bitcoin? Is it scaling? Is it fraud? Is it centralization of mining? No. It's that we don't have enough anonymity. We don't have enough privacy, and we'd better fix that before this gets too popular. Adoption of a platform with insufficient privacy is extremely dangerous. If you're the only one doing anonymous transactions, you're not anonymous. What we need is ubiquity of privacy. This should not be an option that I check in my Samurai wallet that says, use Tor. It should be default on every wallet, every time. There should be no transaction that isn't confidential. And here's the interesting thing. If you ask the banks whether they want anonymous transactions, they absolutely do. The distributed ledger technology is being built with anonymity. They're using range proofs and zero-knowledge solutions and mixers and confidential transactions. They're trying to build confidential and anonymous systems for settlement. Why? Because they can't trust the motherfuckers sitting across the table from them who run the competitive bank. Because if they know what's happening on the network, they will front run every transaction. They will pump and dump every asset. Why? Because that's what they do every single day. And of course, since they can't trust each other, They understand the need for privacy. They will build their private blockchains. They will build their clearing and settlement networks. And they will make absolutely sure that they have confidentiality, privacy, anonymity, encryption, deniability. They will make sure they have all of those things so they can continue business as usual. They will achieve their secrecy. The question now is, will we get ours? Will we assert our human right of privacy? Will we use this technology not to enslave the world through a totalitarian financial surveillance system, but to free the world? Will we do something that will first do no harm? Thank you. Yeah, you can tell I get emotional about this stuff. It really matters. So let's see if we have some questions from the audience. Who wants to ask me a question? Let's get a microphone out to people. And first rule of asking questions is you don't have to tell me who you are.
Hey, thanks for your talk.
Thank you.
I wanted to ask, what do you think separates second layer protocol from the first layer? Like, why is Lightning not the base protocol? Do you think the base protocol should evolve or freeze? And what's your vision for Bitcoin 1.0?
I think that part of good architectural design and network protocols, and I say this because my actual specialization is network protocols. So I have a master's degree in data communications and distributed systems. This is what I studied, network protocol design. And one of the fundamental principles when you're designing protocols is to have separation between the layers such that you don't have side effects bleeding from one layer to another. This form of abstraction that allows you to have clean interfaces between the layers so that you can't see what's happening in one layer from the layer underneath or above. There are no effects that bleed. You don't try to implement everything in one layer. These are fundamental principles in network protocol design, but not just network protocol design. They're the same exact principles that you have in software engineering, right? When you write a function, you want that function to do one thing, to do it as simply as possible, to do it with zero side effects, right? That's how programming works. And you create abstractions that do one thing simply and with no side effects, and then you build higher level abstractions that combine these primitives to do more complex things. And the reason we do that is because you can prove the validity and the behavior of a simple primitive without side effects. And once you have a collection of primitives that are well proven and reliable, then you can build on top of that with additional functionality. That's how you get scale, but it's also how you get modularity. It's also how you get security. It's also how you get predictability in performance and in the security, of course. These are not just good principles. They're essential principles when you're trying to scale. Otherwise, things start breaking very, very quickly. And we see that on the internet, where some of the layers are not quite as separated as they should be. So, you have these nice clean layers. You have your physical layer. You have your data transport layer, things like Ethernet, for example. You have your basic IP network layer. Then you have your connection-oriented transport layer with TCP. And then you have blah on top of all of that. It was all clean, but then above that, suddenly you started getting these weird effects, right? So once you get above TCP, things get a bit messy. And some of the layers are not quite separate, and they step on each other, and you have side effects that bleed up and down. But the biggest mistake we made on the internet was not building sufficient privacy into the base layer. And now we're trying to retrofit that on top. And we're trying to do it with the fourth and fifth and sixth layer above IP. And the result is a disaster. The result is totalitarian surveillance. The result is the death of peer-to-peer principles, centralization of power, the death of net neutrality, and all of these other effects that we see come directly from the fact that you have insufficient privacy in the base layer, insufficient fungibility of packets, if you want to put it that way. And so what is the important thing we need to achieve in the base layer is not scaling. The important thing we need to achieve in the base layer that cannot be achieved in the layers above is fungibility and privacy with strong guarantees, simple primitives. And if we have privacy primitives and fungibility primitives in the base layer, then we can do scaling at the second layer, and we can do it securely. Otherwise, we have a privacy problem. And that privacy problem will get magnified as we go up the layers. If you can do analysis on the base layer, that gives a great degree of insight into what's happening above. There are, at the moment, dozens of companies that are doing analytics. Those are just the private companies. Of course, every intelligence agency in the world is tracking every single Bitcoin transaction, every UTXO, on every altcoin, and every service. And they have little hooks in the centralized exchanges, merchant payment services, so they can get feeds that attach each one of those things to specific identities. And once they have one identity in correlation, they can figure out the rest. We need to destroy their business model. Can we get a microphone over here, please?
Hello. Hello. So my question is, what if USA and EU ban exchanges like gambling sites and pyramid schemes, similar like China? So what is the solution of that? Thank you.
That's a great question. What is the solution to pyramid schemes and the various Ponzi schemes that are occurring on a daily basis throughout this entire ecosystem of related cryptocurrencies? First of all, it's naive to think that pyramid schemes only happen in cryptocurrencies or in regulated markets, or even that regulation stops pyramid schemes. The word Ponzi comes from a fund created by George Ponzi in what was then a regulated market. Not as regulated as today, but a regulated market. If you get Madoffed, that's because you were rich enough to be able to buy into the fund that was a Ponzi scheme for the rich in a thoroughly regulated market, and in fact ended up being one of the few people who went to jail because he committed the cardinal mistake of stealing from the rich. You do not do that. You can defraud 1 million people out of their mortgages, but do not steal from the rich, because then you might actually end up in jail. Probably a very nice jail. You know, not the kind of jail that you'd send someone for smoking a joint. But how do we deal with pyramid schemes? How do we deal with Ponzi's? They happen, and they will continue to happen, and they'll happen in regulated markets and unregulated markets, and they'll happen more in unregulated markets. And the reason they happen more in unregulated markets is not because the regulators are stopping Ponzi schemes, but because they're restricting access to entrants on both sides of the market enough that it's very difficult to generate the type of liquidity needed for Ponzi schemes. I mean, you can list Herbalife on the stock exchanges. No one's touching that. But if you can appeal to a worldwide audience of investors, then you can really accelerate your pyramid scheme, right? And as a result, that's exactly what's happening. There's only one way to stop investors from making stupid mistakes. They have to first make stupid mistakes and lose money and be more cautious and make more stupid mistakes and lose money and be more cautious. You cannot teach someone who is making a return they've never seen in their life, that the reason they're making a return that they've never seen in their life from a website that says guaranteed profits 10% a week is because they're sitting on the upper levels of a pyramid that will surely, at some point, collapse, leaving 90% of the people with nothing. You cannot convince them. How do I know this? Because I try every day. If I call out a scam on Twitter, I am hailed as a hero. No, I'm not. I get viciously attacked by every participant in that pyramid scheme. How dare you side with the banks? I thought you were one of the good guys. How dare you call, insert latest Ponzi here, a scam? People used to say Bitcoin is a scam. When did you start taking money from the banks? People are extremely resistant to learn that lesson, and they will not learn it if you tell them what the lesson is. They will only learn it experientially. Experiential learning. It's the latest in education. And the way that works with investors is they have to lose money. Why is it that Americans are less susceptible, for example, to pyramid schemes than your average Chinese investor? Be careful how you answer that question. The reason is really simple. It's because Americans have been investing in pyramid schemes since the early 1900s. And they get burned again and again and again. And this lesson starts getting passed down generationally. So the first time you come back from school, and I remember this day, where my fellow school members were playing a game called Egyptian Pyramid, where they drew on the blackboard a big triangle, and they said, you're here, recruit 2 people each below you, and take your lunch money and give half of it to the person above you, and then you recruit 2 people and they recruit 2 people. And I looked at that and I thought, this is amazing. We could all make so much money. In fact, half my friends are already buying lunch like they're kings. And I went home and I told my dad about this amazing new thing that I discovered at school, what they were teaching us, right? Not the teachers, but everybody else. The Egyptian pyramid. And he sat me down and explained to me why it's a scam, and what happens when it ends, and how many of those kids are going to get into very serious trouble when the pyramid collapses. Why? Because he'd been scammed with a pyramid in his youth. And his father had been scammed with a pyramid in his youth. And so we learn, and we tell our children. And the only way to learn that mistake is to lose money. The reason investors are more sophisticated in the United States, for example, or in many Western nations, is because they've had 100 years of practice. Nothing else. There's nothing inherently better about the regulatory system. In fact, arguably, the Chinese regulatory system is far more effective. They actually shoot bankers. And then they bill their family for the bullet. They do. They execute hundreds of them. Now that's maybe a regulatory system I could get behind. No, okay, never mind. Sorry. For a moment there, I forgot I'm a pacifist. But anyway, the point is you cannot teach these skills unless you use experience. So, the biggest mistake you can make is teach investors that they do not need to make smart choices themselves. That if they make bad choices, they will get bailed out. That if they allow someone else to vet, authorize, rate, value the investment, if they outsource the decision-making, if they outsource the risk to someone else, everything's going to be okay. And of course, everything is not going to be okay, because giving that power to someone else immediately introduces corruption. So then the people who are rating, vetting, authorizing, and deciding which investments are safe are the people you need to corrupt in order to introduce your pyramid scheme. they also are not infallible. In fact, they cannot operate at the speed of the market because centralized decision-making does not scale. Markets do. What you need to do instead is tell investors, caveat emptor, buyer beware. There are scams out there. We will not catch them until they've done enormous damage. You will lose your money. Be careful. The stock market is a pyramid scheme. The bond market is a pyramid scheme. The automobile loan market is a pyramid scheme. The student loan market is one of the biggest pyramid schemes we've ever built, and all of them are going to crash, as are many of the altcoins and ICOs. And the only way to help investors is to let them make that mistake, take full responsibility for that mistake, and lose all of the money that they put in. Yes, punish the people who did it afterwards. But you can't save people from their own stupidity. And when you try, you make them stupider. Next question. Thank you for that.
Hi, Andreas. You
Thank you.
mentioned unbanked people, right? And you mentioned the banking system and the KYC and all that stuff. So how do you see those unbanked people who don't have access to classical financial instruments, how do they get to crypto?
Well, they get to crypto not by buying crypto, they get to crypto by earning crypto. And that is the fundamental shift in your mentality you need to make, which is the idea that this is an investment. In order for it to operate as a currency, you have to use it as a currency. And don't get me wrong, right now, you can't. Let's be direct. Bitcoin right now, on its base layer, does not scale enough to be used as a retail currency. It is very useful for cross-border transactions. It's very useful for import-export businesses. It's very useful for outsourcing. It's useful for store of value. It is not useful for buying a cup of coffee. And as Giacomo said, blockchains are never going to scale in the base layer, but Bitcoin can. And it's going to be a combination of both second and third layer scaling as well as base layer scaling. We'll increase the block size again. Already did. We'll do it again, if necessary, not to support bare transactions, but to support more second layer scale on the base layer when necessary. And I don't think anyone is really opposed to that, except for very few outliers. How do we get the pour on this? We make it better. We make it bigger. We make it faster. We make it more secure. We make it easier to use. We add complexity in the back end to remove complexity from the front end. We create complex systems that are easy to use. There's this real fallacy in engineering that the way to build simple-to-use systems is to make those systems simple and to make the simple choices. In fact, most of technology, most of engineering is a series of inherently unbelievably complex things, each of which took decades to build, each of which was unimaginable at first, each of which required people to overcome this unthinkable nature of the complexity to build entirely new sciences, professions, disciplines. If you go to someone in the early 19th century and you say, we'll electrify the world and even poor people will have a better time, they'll just do the quick math in their head and they will write a PhD showing you why there's not enough copper in the world to do what you want to do. Why there's not the possibility of creating enough electrical energy, why you cannot distribute it, why the infrastructure upgrade is unthinkable. If you introduce to someone the concept of an automobile, and you say, well, in order to make this happen, we just need to redesign every city in the world and repave all of the roads, all 7 billion miles of them. But don't worry, we'll do it in 40 years. Like, that's not going to happen. That's ridiculous. Can you imagine the amount of money that would take? And this internal combustion engine, there's all of these bits that move up and down, and it's electrical and chemical at the same time. Look, horses are simple. Eat hay, poop. I don't know why you want to do this heavy engineering lift to bring this technology. Complex technology can create simple solutions, and in the background, it's unimaginably complex. Most people don't understand how it works. That's okay. That's what specialization is all about. I was at the Internet conference in Stockholm last week, an audience of about 8,000 people, all of them Internet specialists, engineers, right? Or most of them. And I asked the question of the audience, how many of you understand how BGP works? So I'll ask this audience as well. How many of you understand how BGP works? I'll put my hand up because I do. Great. Maybe 20 hands went up in an audience of maybe 150 people. How many of you use the internet? Never mind. You do not need to use the internet. BGP is unimaginably complex, and itself rides on top of a routing infrastructure that is unimaginably complex. And there are lots of people who love that and work in that day in, day out. There's someone out there who is tweaking BGP routing tables every hour of every day of their life, and they just love it, and I'm thankful they're doing it so I don't have to. The bottom line is that we will scale, and it will be unimaginably complex. And if you try to read the Lightning paper or Drive Chain paper or Mimblewimble or Sidechains or any of these papers, like me, you read it 3 times, understand 10% of it. That's if you have a master's degree in computer science. And then you ask the creators to explain it to you so you can put it in your book. Okay, that may be a rather narrow example, but that's what happened to me. I don't need to understand it in order for it to work. And the way we get to poor people is through a relentless process of optimization and scaling that will take decades, that will gradually take the cost of a transaction to the marginal cost of 0. And it will take the capacity of this network to billions of real peer-to-peer, trustless, private, confidential transactions per second. And if they're not private and confidential, I don't want them. That's how we're going to do it. It is possible. It is just as possible as bringing Skype over 3G to a village in the Amazonian basin on a $20 Android phone, which is happening now. And if you told me that was going to happen in 1993, I wouldn't believe you, even though I was building part of it. Let's take another question. While we're looking for a person to take a question, I want to point out one thing. The reason you can do video conferencing to the furthest reaches of the world had nothing to do with bigger pipes. It had everything to do with 2 inventions that came out of a small German research institute called the Fraunhofer Institute of Technology, which invented MP3 and perceptual lossy compression in the mid-90s. We didn't make the pipes bigger. We made the videos smaller, much, much smaller. So that gives you an idea of where I stand on the scaling debate. Yes, we have to make the pipes a bit bigger, but we have to make the data a hell of a lot smaller, and there's a lot of smart people working on that. We haven't even scratched the surface yet. I'm not ready to give up. Next question.
Hi, Andreas. Thank you for your talk. My question is about, so on December 10th, if I'm correctly informed, the CME is going to start futures trading. And my question is about, since this year we have seen already 2 forks, almost 3, and forking isn't something quite new to like a futures exchange because the underlying assets usually don't fork. I haven't seen gold forking or oil contract futures forking. But the implications can be quite heavily because, for instance, on BitMEX, when the minute before, since they said they're not going to give when the futures close on December 31st, they're not going to credit any 2x coins. And so the futures were trading way below spot price. And when the email was that the 2x hard fork was cancelled, was released, in like 5 minutes, that was like 15%. You could like easily profit from that. So how will that affect how more forks and the futures market?
Okay, that's a really great question. I know a lot of people have questions about the Chicago Mercantile Exchange. I'll tell you a few things about it. First, I'll start with a disclaimer. I work on the oversight board of the Chicago Mercantile Exchange's Bitcoin reference rate. I took this position 8-9 months ago, and it's unpaid. Just in case you were wondering, of course. And the point of this is simple. Before the Chicago Mercantile Exchange embarked on this idea of doing a futures market, one of the fundamental things you need for a futures market is the ability to have a consistent, predictable, publicly audited reference rate, meaning a price. A price both every 30 seconds as well as point price once a day that you use in order to underpin, thank you, sorry about that, in order to underpin the legal contracts that are part of the futures exchange. So if two people are disagreeing, what was the price of Bitcoin yesterday, right? They need a way to answer that is essentially non-reputable, that they're both bound to. The Chicago Mercantile Exchange, therefore, started this process by building these two reference rates. The Bitcoin reference real-time index, which is a spot price that updates, I think, every 30 seconds, is published on traditional trading feeds like Bloomberg and Reuters and things like that. That allows a trader anywhere in the world to answer the question, what is the Bitcoin price today, to a high degree of certainty. And the other one is a point price, which is every day at 2 p.m. Central, which is based on the average of some amount of time. So it's a moving average taken at a point in time that's considered the daily rate. The role of the Oversight Committee, and I'm sorry, this is a long disclaimer, but it gives you some context as to how these markets operate. The role of the Oversight Committee is to create and oversee the application of the rules regarding which exchanges are used to pull data about the current Bitcoin price. And we created rules in an open public consultation that involved not only publishing the minutes of all of our meetings with 3 independent experts that have nothing to do with the CME. I'm one of them, a professor at Imperial College is another, and one of the customers of the Chicago Mercantile Exchange is the third. We publish these rules, and among other things, simple things like, for example, you have to publish a price consistently and not stop publishing a price. You have to have trading fees. So we immediately excluded exchanges that did not have trading fees, that were trading 0 fees, because they can basically run bots that create fake volume. And out of these rules came that system. The part of the Chicago Mercantile Exchange that's doing the futures market is completely unrelated to this. I found out about it on Reddit. They didn't tell me in advance. They couldn't tell me in advance, in fact, because what we do is absolutely public and auditable. So I found out about it, and I think it's fascinating. I think it's inevitable. I think it was going to happen anyway. You've got to understand that this is a cash-settled market. That means that nobody holds actual Bitcoin, which means that for the CME to operate this market, for every short position, they have to have a corresponding long position, and both have to be capitalized in US dollars against the CME. Meaning that the CME customers who have very strict requirements for capitalization have collateral deposited and audited on a daily basis, and that collateral can be used to take certain positions, but not too big positions, so they can't go over their collateral beyond a certain level, and they have to be matched with buyers and sellers. They also have some trading, what are they called, circuit breakers, which ensure that if the price of Bitcoin drops or climbs more than 7%, they cease trading, which means that at this point in time, they'd be ceasing trading 3 times a day. But hey, that's the tolerance of risk they could have. Ironically, some people objected to that were the traditional investors in the CME, and they said, this is too risky of an investment to include in the CME. which is hilarious because the CME has been in the business of managing risk for 200 years and trading physical commodity futures in very risky, very volatile markets. Price of wheat is doing great. You have a drought that was unexpected. Price of wheat collapses. Now you have to pay out billions of dollars to farmers who have taken positions in these future markets. That's what they're used for. Who's going to short Bitcoin? That's a question I get a lot related to the CME futures. Who the hell would short Bitcoin? Well, there's a couple of options, and I think when trading opens on December 10th, actually we might see quite a lot of short activity, because part of the reason Bitcoin is so volatile is because you can't take a position against it. So if you can't short it, if it starts pumping, the price can really just go to extreme heights without any downward pressure. It's unbalanced in that way. So who shorts? Maybe some traders, maybe some investment banks. They're going to short Bitcoin. They're going to do so at great risk. Just like people who tried to short the stock market right now, which is also in a bubble, do so at great risk. But I think the most interesting possibility is that the people who take short positions with the least amount of risk are miners. You see, miners actually hold the underlying asset. And since they hold the underlying asset, unlike all of the other people who are naked shorting, they're not naked shorting. And they have the collateral to make good on that option call if they lose the bet without loss. And their risk is not unlimited. So if I'm a miner and I have to pay electricity prices next month, but I don't know what the price of Bitcoin will be, and I'm earning Bitcoin today, that's a very risky position. If the price collapses suddenly, I may go out of business not because of profitability, but simply because of cash flow. And that's not smart business. So what I do is I take 10% of my Bitcoin and I put it in a short position. Now, if Bitcoin does collapse in price, that gives me a cushion. It gives me a margin. It actually allows me to recover some of my losses from the decline in the price, so I can pay electricity next month. And if I calculate, my cash flow and operating costs, I can figure out exactly how much Bitcoin I need to short in order to have a good risk-reward premium, right? Basic market economics. But if the price climbs tremendously, while everybody else who's shorting is losing their shirt, I'm losing on my 10%, but I'm gaining on my 90% of actual Bitcoin that I hold. So I can take that position with very little risk and make money on it. So I expect we're going to see miner participation in a big way in futures markets. Well-capitalized, properly managed futures markets. And, some people say, well, this brings legitimacy to Bitcoin. And as you may have known from watching some of my talks, I am uniquely allergic to the word legitimacy. It makes me want to vomit. When warmongering, war-profiteering bankers use the word legitimacy to criticize Bitcoin, that takes a lot of audacity. But in this case, I think it's important to recognize that the CME is not Wall Street. The Chicago Mercantile Exchange comes from a 200-year tradition of mercantilism. They are people who trade in actual commodities. These markets trade not just oil, of course, but probably their biggest product is pork bellies, wheat, corn, ethanol, and hundreds and hundreds of other commodities, and their primary purpose is to protect risk for producers of these commodities. They're not the type of Wall Street mentality that is about printing money out of nothing and creating derivatives on top of derivatives on top of derivatives. I don't think these people are as alien to our culture as many believe. I've met a few of them. So before we go kind of bundling all investment bankers in the same bundle, I think it's important to recognize that I have no influence or interest in the Chicago Mercantile Exchange futures market. I know it's creating a lot of interest. I think the period between December 10th and December 31st is going to be very, very exciting. 21 days of extreme excitement, because the most likely thing to happen is we're going to see a lot of volume. You think we have volume in Bitcoin now? When you watch a trader eat a sandwich while he presses enter on a $10 billion trade, you realize how small this game is, right? We're going to have a lot of volume, and that's not bad. In fact, that is the first step to reducing volatility in Bitcoin. That's what we need, massive liquidity. And I'm glad it was the CME that did it first. Let's take 1, 2 more questions. How are we doing for time? Anybody give me a time check? We're supposed to stop at 1 p.m. We've got half an hour. Okay. Thank you. All right. Question.
Hi. So my question is, how do you think society's tax systems will implement anonymity in finance? In other words, how can we have an income tax and Monero or zero-knowledge proof transactions?
That's a question I also get a lot, which is, how does society adapt to a future where everybody can tax evade? I really like this question because it reveals a couple of fundamental assumptions that we do not discuss in society often. You see, rich people have been tax evading the entire time. Multinational corporations can do jurisdictional arbitrage all day long. Today, the tax paid by multinational corporations is at a historic low of less than 6% on earnings. 6%. Now, as a self-employed person in the United States, I pay about 37% in my taxes, and for that I get no health care. Motherfuckers. And so the point is that the real problem here isn't the fact that tax evasion happens. The problem is that we just democratized jurisdictional arbitrage and allowed the middle class to operate like a multinational corporation, and suddenly that is shocking. What if everybody operated like a multinational corporation? That's exactly what just happened, right? What if everybody could print Bibles? What if everybody could publish opinions? What if everybody could carry weapons? What if everybody could modify their DNA? What if everybody could 3D print a weapon, strap it to a drone, and fly it around shooting people? These are all questions we have to address as a society, because in the relentless march of technology, what we are doing at a very fundamental level is changing the scale of individual power. These are superpowers. Superpowers that our ancestors didn't have, and through technology we gradually acquired superpowers. I can publish to 1 million people in seconds. None of my ancestors could even imagine such a thing, let alone do it. And so the implications that we're really trying to deal with are much broader than just finance. They're the implications of what happens when individuals have superpowers, and some of those individuals are messed up in the head, or need a lot of mental health support, or need to be isolated from society, because there's a few of those too. Yes, that's a problem. I don't pay taxes because if I didn't, I'd get caught. I have to make my own moral calculation about how I want to participate in a society that, at least on its face, is democratic, or even not a democratic society. And even though I know that the majority of my taxes go towards war, a small percentage actually do help people in need, even in the United States. A trickle builds roads. Some of it funds schools. Some of it gets kids vaccinated against polio. And so for that reason, I pay my taxes not because I can't get away with it. I can get away with it. And I can get away with it not because of Bitcoin. I can get away with it because I can afford really good tax accountants. And I can repatriate or travel around the world because I have really good passports. And I have literacy and numeracy and education and a small amount of wealth, certainly by comparison to the rest of the world. I have privilege, and that allows me to not pay my taxes. And so the question is, what happens when you allow everyone to not pay their taxes, even those who didn't have privilege? And the problem is you just gave privilege to everyone. What a shocking idea. The privilege of financial inclusion. We will have to re-envision how we fund societal goals. Some people suggest things like a combination of consumption tax, sales tax, with universal basic income. I'm actually a fan of universal basic income, which immediately makes a whole bunch of libertarians on Twitter scream at me. Well, that and feminism, but let's not go there. The reason I'm a fan of universal basic income is science. It's the fact that all of the scientific studies that have been done on the provision of universal income show that when people have money for doing nothing, they don't do nothing. What they do is it suddenly frees them from the considerations of surviving the bottom two tiers of the Maslow hierarchy of needs, like eating and having shelter at night, and it allows them to start moving towards the upper levels of creativity, productivity, and self-actualization. And because human beings are, by their very nature, creative, and because people get really bored sitting around doing nothing all day, unless they have mental health problems or substance addictions, which have nothing to do with the income, if you give basic income, people become creative. All of the studies show that. It's an abhorrent idea to many capitalists. We're going to have to deal with a lot of abhorrent ideas, and I suggest that the best approach to dealing with those ideas is science, getting actual answers from actual data, rather than moralistic answers about everybody should pay their taxes even if most of it goes to war. Yes, this is a problem. But it's only a problem because what we're doing is empowering the middle class to do what every multinational corporation has been doing for decades. Next question.
So back to this total financial surveillance
hello
problem. Back to the total financial surveillance problem. We find that... Sorry, I lost my trail of thought there. Yeah, it used to be... normally it's quite expensive to get privacy, right? You need to do something in order to get financial privacy. And that is probably why it's so hard to explain that this thing is a basic right. So you're suspicious because you're doing effort to get privacy, so you must be hiding something. And now we have these new technologies like signature aggregation and second layers that would actually make privacy cheaper. And that's really nice, because then you can say, well, of course I'm getting privacy, because why would I spend more money to not have privacy? So it's easy to explain to people, easy to explain to governments. Do you think that's coincidence? Is just lucky coincidence good for us, or is there more to it? And do you think, that might change again, where we get to a situation where privacy is expensive again?
That's a really great question, and I think it's very insightful too, because the reason we can't afford more privacy is because privacy, like any other feature, can be, through the use of technology, made less expensive. So as you scale up technology, you reduce the marginal cost of all kinds of products and services, and privacy is really just a service or feature of markets. And when you have increased supply of privacy at lower marginal cost, it drops the price. And in fact, because there is inherent demand for privacy around the world, and most of the inherent demand for privacy comes from places where governments are appalling, and where banks are unaccountable, and where people are afraid to express opinions because of the consequences that happen. Somebody was talking about earlier today that censorship resistant, I think it was Giacomo, censorship resistant doesn't matter if you don't have privacy, because then you can apply extrinsic consequences, and in most cases extrajudicial consequences to actions. And as a result, then the cost of not having privacy goes up too, because not having privacy is also a product and has a price attached to it. And in many places in the world, the price is your life. So part of the difficulty with privacy as a good that is both produced and consumed is that the implications of losing your privacy are either externalized to society as a whole, or they are distant from the proximate cause. Meaning that you lose your privacy today, but you go to jail 6 years later based on something from your browser history today, right? Or you lose your privacy today and you have a democratic government, And then in a wave of nationalist populism, you end up with a fascist government 2 years from now, and they still have your browsing history. And then all of your highfalutin ideas about human rights are an indictment against you. Does anybody know the origin of the phrase, "let 1,000 flowers bloom"? Does anybody know that? Mao. Mao Zedong created this program in immediate post-revolutionary China, which was the idea of openness, to let 1,000 flowers bloom, to allow the explosion of creative expression, even dissident opinions. And people believed it, and they bloomed. And all the bloomings were carefully recorded and cataloged, and then the purge happened. And they murdered hundreds of thousands of intellectuals who had believed the idea. What they don't tell you is that "let 1,000 flowers bloom" immediately preceded one of the greatest ethnic and intellectual cleansings in China, political cleansings, that was based entirely on allowing people to speak, carefully cataloging that information, and then a few years later indicting them for it in summary way. So one of the problems with privacy is that you lose your privacy every day, but you don't pay the price for that perhaps until a lot later, and you can't immediately identify the moment at which your loss of privacy goes from something that is an inconvenience to something that is a deadly risk. And the more developed and democratic and open and secular the country you live in is, the less you see a direct correlation, because the other problem with privacy is externalization. So part of the reason we see these massive populist movements and we see all of the problems we have with nationalism and extremism on public forums has a lot to do with the erosion of privacy. The erosion of privacy actually erodes democratic institutions. As democratic institutions get weaker, they serve people less, and as they serve people less, extremism flourishes. So we pay a price in Western democracies where our democracy is getting weaker and weaker, and part of the reason for that is the erosion of privacy. The ability to track the electorate, know their opinions, and know how to feed them just as much stimulus, their dopamine receptors, to keep them docile and entertained by cat videos, so as they don't pay attention. So they can be enraged by the fact that someone said something or someone took a knee at a sports game, and not pay attention that your government is committing genocide in Yemen. That's erosion of democracy, and it happens precisely because of erosion of privacy, because privacy affects freedom of speech. It affects freedom of association. It affects freedom of expressions. As you start losing these principles and these human rights, democracy gets eroded, and eventually you get fascism. And ironically, that's when you start paying the ultimate privacy cost. This fundamental problem of externalization and distal proximate cause is why privacy is so difficult to price. There's only one price for privacy that works: free, everywhere, all the time. We're wrapping? Good. Thank you so much, everyone. Really appreciate it. Thank you.